Group 5 reported its interim results this morning. Earnings well, pretty stable, but the revenue jumping sharply. Company Chief Executive Mike Upton joins us for a closer look at the numbers. Well, the market likes it, Mike. 4.5% improvement in the share price this morning. You, I suppose, have to just try and get the margins back to where they were some years ago, and then you'd really be flying.
Absolutely. Thanks for having me. I don't follow the share price, so that's good news. But no, I think revenue growth, but obviously weaker margins. There's a few factors in there. One is that we went into the oil and gas markets and power some years back, and we created a new business called ENC Engineering and Construction that was focused on turnkey delivery and services, and that's been a big revenue jump. I mean, that's sort of grown R1 billion plus on its own on a like-for-like.
So that's
year-to-year
the prime reason for this huge increase.
That's one of them. The other one is we've been able to gain quite a lot of sort of new traction in the real estate market. So our buildings business has grown again, and that's off a reputation for delivery. So those two things really are the big drivers of the revenue. Those two big drivers of revenue also amongst the lower margins in our group. So that's why the mix has changed in terms of revenue and profit. We've
got a lovely graph that we're going to put up on the screen now, which shows your margins between 2004 and 2008, the profit margins, where it was between 6 and 7%. And subsequent to that, as you can see it on screen, 2012, 13 and 14, these are all for the first half like for like, you're between 3 and 4%. Now the question has to be, were the 2008 to 2011, was that normal, or is where we are now the new normal?
I think where we are right now is it's a norm in this market where it's very tough trading. The work is hard won, it's very competitive, there's a lot of overcapacity still. So, what's a normalized market just through the cycle? Obviously, in the peaks of the World Cup and so on, that was an abnormal market too on the other side of the scale, where there was a shortage of resources, there was a lot of work going on. There was also quite a lot of risk in terms of, short-term lead times and contracts, so they were all, milestone sort of driven in terms of had to meet dates. So there was a lot of things that were different then to what is this sort of situation now. But we'd like to think that the normalized margin in our business is on an upward trend in terms of the business model and the business mix, where we're mixing turnkey production, sort of large turnkey EPC contracts with the services base, and also a more expansionary look at Africa. That model should actually produce better margins going forward.
How much?
I wouldn't like to guess.
Well, you're 3 to 4 now.
But I think
7 to 8 over there.
We've always said we need to be a plus 5% business before we start, and then we need to move. That then the vagaries of the markets or sort of targeted actions need to then move it above that. But we're suboptimal now in terms of margins, and that's very clear.
Is the outlook more positive for you now, given government's infrastructure plans going forward?
Well, government infrastructure plans are not that visible at the moment, so I think what we're saying is that this order book and these results are hard won, from having to make a plan in spite of a weak South African markets. I mean, our theme is really that the SA market is quite flat. There's pockets of activity which would be in the sort of power side, a little bit of water, there's a bit in healthcare with government, but generally the market's quite flat. And so our excitement, if you like, or in terms of, has come from the power market and also from an over-border expansionary sort of stance, which is not shown in the order book, but in terms of margin generation, work outside is generally better for us in terms of margins.
Mike, before we let you go, our executive producer Janine is going to be upset about this, but your expectations for budget next week?
I would hope that, and I think it's a budget before an election, so obviously that maybe would change what might be a budget post the election, with a new cabinet in place and so on. I would hope there's more traction in terms of the timeline, the funding, the capacity building for the rollout of infrastructure, because I mean South Africa really is on the back foot now. We need to have economic growth, and infrastructure is the enabler.
It was Mike Upton hoping for the impossible. It is an election year, but nevertheless.